Hello traders, it is stunning September 15th. Let's recap this entire week. Here's a chart, here's a trade on 1 minute chart. Shock or not? How in the world did I know that this will be crucial target on S&P? How in the world did I know that it is absolutely essential and crucial to move your stop outside of break-even if you are in this trade? Because Fibonacci and price action said so. This remains brick wall. This entire week, if you browse videos from prior days, this been crucial obstacle. And I continue warning you this entire week. If you are at this Fibonacci support, your bias remains firmly bullish. No ifs or buts about it. This remained our crucial target on multiple trades. This was stunning, breathtaking Monday morning. One of the very few mornings in recent history we can remember this much volatility and this much excitement at the open. Following 2 mornings, it was very different story. Market was brutal and vicious, as this remained very crucial resistance. This morning, once again, market opened up at this crucial Fibonacci support. Here comes Groundhog Day. Here comes your bias, firmly bullish. Fibonacci level been present in front of you since Monday. How to trade these levels remains the key. Based on the rules you learned in the course, all the levels in front of you I developed after 20 plus years of studying price action and Fibonacci levels and developing my own rules. Exact same rules you're witnessing on 1 minute chart is what I'm presenting at hedge fund convention except on stocks, ETFs and options. S&P is blasting through the end of the minor trend. How did we know? Price is heading to this level next. Trail very carefully. Students in drastically different trade. Students waited for extra confirmation. Students understand extremely well when to enter, when to exit the trade, when not to babysit through pain and torture. How did I know that S&P is heading higher to this level? Pure and simple. Fibonacci and price said so. How did I know that this will be next obstacle? Pure and simple. Fibonacci said so. If you trade based on Fibonacci levels, not based on delayed indicators, your trading and investment decisions go to entirely different level. Shock or not, decision point 2 is reached. Your key Fibonacci target you learn in the course. Price is taking a bit of a pause. Next level is here. If you've been in a trading room since Monday, you know how crucial 2129 will be. But this can remain major obstacle. This is where price can stage spectacular retracements again. So here we are under endless fight at decision point 2, markets flying to here. Adjust trail very closely. This is where you're gonna see very powerful pullbacks. Why is that? Because this is not your little baby level, traders. This is your hourly level. This is institutional resistance that price struggled to break through since Monday. Since Tuesday, my apology. On Monday it was broken. On Tuesday and Wednesday it was not. So expect very powerful pullbacks. Price is blasting through this level. It will head to 2140. One step at a time. This is crucial reversal zone on baby chart. This is a major obstacle. This is where S&P is struggling immensely. This is short-term S&P chart. This is monthly chart. This chart had been in front of you since the inception of the website from 5 years ago. Have you been trading this chart properly as an investor? Have you been respecting this crucial Fibonacci reversal zone where market remain in massive correction? Do you remember the collapse on S&P in 2015? But as long as you knew that this is crucial Fibonacci support that remains respected, it is only bearish correction. Exact same Fibonacci level in front of you on short-term chart. Exact same decision point 2, where price retraced from and struggled to break through, where market found very powerful bullish push from famous 1800 level. On monthly chart, hundreds of points. On short-term chart, a couple of points. By the time the student of the course respects and understands this level, this is your first target, 4 points later. Being a follower in day trading, very dangerous idea. Knowing where to enter and where to exit determines the rest of the story. Here comes the selling pressure. Did we know to expect this? Absolutely. This is what price does each and every time when it comes to reversal zone. This is what price had done on monthly. By the time you come to reversal zone, you're in significant profit and you trail very, very closely. Right outside of this level. This was expected. This is exactly the reason I named this level reversal zone. You never enter into this level. By the time you come to this level, you are in significant profit. It doesn't matter if it's Apple monthly. It doesn't matter if it's oil weekly. It doesn't matter if it's gold. It doesn't matter what instrument, what time frame. And that's the power of knowledge. Every time. Ladies and gentlemen, we are out. Once again, Fibonacci levels and Fibonacci rules shown you very, very clearly where to enter, where to exit. This is a trade. 7 points later. So, once again, let's document this. One long from Fibonacci support. Clear on that? Every trade, different stop, different target. Because reversal zone on this Fibonacci level was not reached by a couple of ticks, which was absolutely expected, this price reached only 2 key targets. This is trade number 11. Out of 11 trades, 10 trades reached decision point 1. Remember how crucial the target was on multiple trades, as bullish trade on S&P had been minor? Multiple times, including twice yesterday. First target was 1.5 and 2 points. This morning, drastically different morning. By the time price came to the second target, 6 points later. Every trade, different stop, different target. Every single trade, absolutely crucial and essential to place the trail in proper place. Exact same formula you witnessed on short-term S&P is what you learn to apply to long-term instruments. This is oil. I'm receiving a lot of questions all the time about oil, and I can constantly show you and warn you. One thing remains constant in life. Knowledge is power. Bullish rally on oil came from exact same place as bullish rally on S&P, from reversal zone until the end of the minor trend. If you were in a trading room in the last 2 weeks, especially last week and especially yesterday, you saw what was happening with spectacular bullish news. That did not mean a thing. As I continue warning you, oil is heading back down to 40. So if you know Fibonacci levels and Fibonacci rules, you are not sweating bullets. You're understanding and respecting very, very clearly the same formula you're witnessing on short-term charts on S&P. Price comes to reversal zone, you monitor for reversal. Rules are met, you take a trade. Price comes to Fibonacci resistance. Rules are met. You exiting a trade and monitoring for short. Oil will become interesting again at 40. In the course, you learn exact same levels on exact same rules, time and time again. Doesn't matter what instrument, doesn't matter what time frame. I highly encourage you listen to the students who trade various instruments. And I highly encourage you, please remember, trading room is always closed on Fridays. Fridays devoted to Fibonacci classes. We start again Monday morning, 9:15 EST in Fibonacci class. Once you learn the rules, all you have to identify what's appropriate for you and your account size. Ladies and gentlemen, here we are. Here once again the importance of playing by the rules and never acquiring position into reversal zone. This was your exit, not your entry. And this is the power of knowledge in Fibonacci. And this is what students use on any instrument in any time frame. Every time. This level remains major obstacle. This level had never been broken. You need to know the rules for broken. This is where one of the trades reached all the way to here, but nevertheless, this level had never been broken. So don't be surprised if price will reverse completely all the way back down. That would have been marvelous, marvelous news. We would love for the market to be here. Here, big problem. Not interested entering near this level. Remains Fibonacci resistance. Market is showing you each and every time where to enter, where to exit. And what you're witnessing currently on oil is identical to what you're seeing on S&P hourly. Take a look. This monthly chart had been in front of you for the last 5 years. Did you acquire position on oil as low as possible, as graduates of the course had done? Did you know to exit at this level? This is what oil had done on monthly. Oil spelled out these levels years in advance. This is S&P hourly. Exact same dance. Here's analysis of GDX. GDX is identical to gold. No surprise here. Christian is asking me about GDX. Here's GDX. Shock or not. This is where gold reversed from in 2011. I remember very, very clearly when in 2011 a friend of mine was inspiring me to start as a website, and I was listening to everyone promoting buy gold, and I was saying you have to be out of your mind because gold at reversal zone traders. Do not enter into it. It is exact same Fibonacci level as you're witnessing on S&P minute chart. The same level. Drastically different set of rules. So let's remember where bullish rally came from on GDX. GDX is identical to gold. I will remind you my posts on gold shortly. So here's GDX. This is where bullish rally came from, and this is where bullish rally is struggling. Shock or not, all the same formula. If you know where to enter and you know where to exit, you do not have sweaty palms. You use drastically different risk management, the same Fibonacci levels, very different formula. GDX is heading down, down, down. GDX in massive sell-off, as expected, as spelled out by price years in advance. Right now, knowledgeable trader is not in GDX. Knowledgeable trader acquired position at around 12 and exited at 30. If GDX will find enough power to retrace all the way back down to 21, 22 level, this is where a knowledgeable trader will be monitoring for long. All the same formula, identical image too. S&P, E-mini, hourly. is this time around S&P will blast through this level. As you can see, S&P retraced from reversal zone 1 down to reversal zone 2 and been struggling for 3 days. Is GDX going to do the same? Will it struggle for the next 2 months, 3 months, or 3 years? I don't know. You learn the course rules? And if I work with hedge funds, we analyze the exact same levels. We analyze where to enter and exit positions on stocks, forex, options, ETFs, instruments I've never even heard of. This is what I will be presenting and discussing at Hedge Fund Convention. Exact same formula I demonstrate on short-term charts S&P. Pure magic, in my humble opinion. Never gets old. And this is the reason I live and breathe what I do. RIX 7 points. Here's a report, 1.5 points, 3 points, 2 points. Pure magic. S&P meaning the same formula as gold, GDX, Apple Monthly. And that's the core of the course. I live and breathe what I do. My students become my dearest friends. Next class starts on Monday. Next class starts September 19th, traders. September 19th. Here is true story from the student who sent me this email, who is currently still in the course. Jim been trying for the last 9 years. 9 years and 9 paragraphs, until he came to the course in the month of June. Since the month of June, he had been trading iron condor on his account. He had not had losing trade yet. So I let my students speak for themselves. Picture perfect example why I live and breathe what I do. You learn the method, you learn Fibonacci rules. All you have to do is identify what's appropriate for you and your account size, as formula remains the same. It doesn't matter if it's euro, it doesn't matter if it's Apple, it doesn't matter if it's S&P mini. What you trade is your choice.